Hello everyone, John Markey here, your Builder CPA, and today we are continuing our series on the IRS Dirty Dozen. So for anyone who isn't aware, the IRS maintains a list of the Dirty Dozen most dangerous threats that taxpayers need to watch out for. And if you have not already, I encourage you to Google this list and ensure the URL ends in .gov, and that is your indicator that you are on an authentic IRS website. So today's dangerous threat is bogus self-employment tax credits. Social media advice continues to circulate about a non-existent self-employment tax credit. That's misleading taxpayers into filing false claims. Promoters market it as a way for self-employed people and gig workers to get big payments for the COVID-19 pandemic period. Similar to misleading marketing around the employee retention credit, we saw a lot of that. There is inaccurate information being circulated that suggests many people qualify for the tax credit and payments of up to $32,000 when they actually do not. In reality, the underlying credit being referred to in social media is not called the self-employment tax credit. It's a much more limited and technical credit called the credits for sick leave and family leave. Many people simply do not qualify for these credits, and the IRS is closely reviewing claims coming in under this provision. So taxpayers filing this claim do so at their own risk. That last sentence literally translates to, this is a red flag. If your tax return comes in with this bogus self-employment tax credit, be prepared to be audited. I know the IRS removed the term red flag from their vocabulary, but they are literally giving you a heads up that if you try to file this, you're probably going to have to validate your return. They're going to send you something in the mail to verify your identity. And I can only imagine that ultimately it will probably get examined, which is a nice way of saying audited. Your mileage may vary, but it's important to only claim tax credits that you are eligible for. And a lot of people don't even know whether or not they are eligible for some of these tax credits. So it really comes down to that gut check. And as I mentioned in a couple of previous videos, most of us have an effective tax rate between 10 and 20%. So if you take your tax liability and divide it by your total income, chances are you will fall somewhere in that range. And if you're significantly outside of it, you want to dive deeper. Anyone who prepares your tax return should be able to explain it to you on a page-by-page basis. And you should also be reviewing it on a page-by-page basis. So if you start to see things for self-employment tax credits, be skeptical. I know that a lot of home builders are self-employed, but that doesn't mean that you can take advantage of all of these COVID-19 pandemic related credits, especially when they are up to $32,000. So sometimes it is less expensive to pay your fair share of tax rather than trying to fight an audit for a number of years after you've filed your tax return. If you're working with a good tax preparer, they will be your advocate. Yes, they will want to take every credit and deduction that you are eligible for, but they will not falsify things. If you work with anyone who falsifies the tax return on your behalf, there will be hell to pay. So as always, I hope you enjoyed this. Thanks for watching. Have a great day.